Walt, busy week in the autonomy markets. Uber and Alphabet both got crushed on their Q4 earnings results, down 7%. So did Toyota. The Honda Nissan deal, it's toast. And now Ford's talking about licensing autonomy after Elon opened the door and said he was open to it. But first, wow, oh, wow. Your partner, Rich Greenfield, in my opinion, the top media analyst in the world, he's on an X rampage around his Volvo enabled LiDAR car. What the heck is going on?
It's something to be seen. And, I think there might have been some family rage quitting on Tesla. And there might have been some interest in a denim blue color more so than technology. And as our listeners, I'm sure, know, the new Volvo XC90 has a LiDAR system, but apparently it's there, but it's not functional because Volvo is having so many software issues, like the key doesn't work, the Bluetooth defaults to off for a variety of reasons, Android's not working. It sounds like a complete debacle in terms of trying to get this thing to work.
Now, if you had a Tesla, it just works. Because I want to highlight this. One of Rich, just he talks about in the Light Shed podcast a lot, is Reddit. I got to highlight this. Rich said, I'm going to quote him here, digital keys, different than key fobs. Yes, there's a difference, Rich. For your phone are very difficult to program. The dealer couldn't figure it out. No shit, Rich. But a Reddit forum user explained the process that required. This is the crazy part here, Walt. Wiping the car to set them up and that nobody at Volvo understands. How are you shipping a half-baked product?
This is what we've now talked about on the podcast. This is another theme for autonomy markets. They're basically, these car manufacturers are out of their depth. And I listened to a podcast this week from your buddy Bigelow from the Bigelow Battle, host of the Bigelow Battle. He was interviewing someone from GM, I think one of their lead engineers, Dave Anderson, I think it was. I might have that name wrong. And when I listened to this, it reminded me again, back to Telco Corner, of what telecom companies wanted to do years ago when data was first coming out, and they had these kind of closed gardens and, hey, we can develop it better on our own, as opposed to partnering with technical leaders. And this guy came from Apple, and he's coming into GM and claiming that they're going to build a better system than relying on outsiders in terms of even just the in-car entertainment systems, let alone, I think what they may or may not be doing in ADAS. And I think, Volvo, perfect example. We'll get to it later. Ford, I think realizing maybe this is not the right thing, that they should partner as opposed to trying to build it on their own. The other crazy thing he said on this podcast was like, oh yeah, we have no problem attracting engineers to work at GM. I mean, you literally just pulled the plug on Cruise. And so if you're like a development engineer, software wise, like how would that be attractive to go to that company? So anyway, I digress. We can get to this more later, but it just seems like there is a disconnect here in these auto companies thinking that they can do things, again, which is very reminiscent for me of telcos that thought that they could control the phone ecosystem or the software within the phone ecosystem or payments, like various things that they tried to do, that they're just not equipped in that world.
No, they're fundamentally not equipped, and they're not going to get the engineering talent. What they did to Cruise and the bitter taste that left in those individuals' mouths, including the engineers, was disgusting. They're not going back. The reputation shot. And you're right, his name was Mr. Dave Richardson. He is the Senior Vice President of Software and Service Engineering. And I'm going to quote on this podcast, because this was an interesting line that he said, and I'm going to quote Mr. Richardson here. People come to GM because you have a lot of quote-unquote air cover, and they're doing a lot of good things with technology. Where's the air cover if you don't believe in autonomy and you pull the plug?
It's crazy. Yeah. I mean, look, I think when Bigelow comes on to your thing, great interviewer. I think he did a good job. Very polite. I think he did double click on that and was like, well, we'll have to go back to that theory, because I think there's some data that suggests that it's very hard for auto companies to attract good software engineers to them at the moment, but particularly at GM, that has to be an issue. So I don't know. But the problem then is, when you perceive OEMs as potential future competitors or partners or whatever, are they still just in denial in terms of what they can do on their own, who they need to partner with, and the willingness to partner in the near term.
There's a lot of denial. So here's a suggestion, Pete. Why don't you do a Bigelow battle between a traditional automotive company and Tesla? Make that Bigelow battle 2.0. What do you think?
I would like it. I think he does it. He does a good job of bringing out some good debates.
He should. And your partner, Rich, he should go back to the dealer and say, take it back and go get the new Model Y, because that rear light bar in that Model Y, that's a sexy looking car. And the software works, Rich. The software works.
Hardware 4 too, so you can get right into FSD 13.
And then you can razz Walt with his old hardware 3. See, you get an advantage.
Exactly. Till my lease is up. I think I have a 3-year lease. Is that possible? I don't even remember. But anyway, so let's move on though to the news of the week. Uber, there's a ton to, as some of my peers say, unpack or double click on in terms of their earnings. Obviously, the stock recovering since they reported, but down about 8% when they reported. It seemed like it was guidance and currency headwinds. And the issue here is when you report in US dollars and you're generating revenue overseas and the currency of that revenue is worth less than or more, depending on what the market is, that obviously has an impact on your results depending on where your costs are. So I've dealt with this with America Mobile back in the day with Nokia, and it's for analysts that haven't had experience in this, maybe just only dealing with U.S. companies, it's something that they stumble on. The other thing that's hilarious that Joe, who works for me, always brings up that we get a good laugh at is tech companies that talk about the leap year and the added day of a leap year, or if it's after the leap year, the one less day in the quarter that you always have to warn about that extra day. So it's like, this is like, analyst stuff. I mean, look, it's possible that was the issue. I don't think if you adequately explained currency as an issue in terms of your guidance for booking revenue in the next quarter, that's going to lead to the stock being down 7%. I think there's still concern about, what is going on in the autonomy space. They did, I thought, a great job at trying to explain the strategy. And I'll go through the 5 points that Dara laid out a little bit later, but I think they did a great job. But part of the explanation is investing more money now for fleet management. And they need to seed the ecosystem to get this fragmentation in the market that you and I have talked about on this podcast. And I think it was that autonomy stuff element that probably still weighs on the stock. And like we said many times, there's probably more headlines to hit in the industry coming up that are going to be, a challenge for them, regardless of how good of a fundamental strategy they have to attack this.
That's the investor analyst side. The most important thing mentioned on that call, Mr. Karashaki talked about autonomous vehicle REITs. Mr. Karashaki, sir, if you got the idea from Walt, you got to call him up because you were spot on talking about it on the call. How did you feel, Walt? Because you called it. You called it.
I mean, he didn't specifically say they were going to do REITs, but he got the point, like meaning that, or he understands the point clearly, which again, we've said on this podcast a couple of times, but for those that this might be your first episode, just to reiterate, whether it's a data center or a tower company, there's favorable tax treatment when you put these fixed assets into what's known as REIT. So the amount of capital that can come into them is increased. So if there's an opportunity perhaps for the government under the new administration or otherwise to figure out how to provide favorable tax treatment for fleet ownership, to what end? To winning the race to autonomy, beating China, enabling capital to flow into an industry that is going to change the economy when it happens. Autonomy is obviously a huge opportunity, whether AI vertical or not, to change the economy in so many ways, as all of our listeners, I'm sure, realize. So it was great to hear Dara when he's talking about, who's going to own all these fleets and re-emphasize the importance of fleets out there, to literally say REITs or reference REIT-like financing on the earnings call this week. So yes, that made me feel good, and I sent some tweets out about it.
Makes you feel great. Autonomy is economy. It is. I call it and coined the term autonomy economy. And I'm going to go stay on this REIT theme here because I'm going to quote Mr. Karashaki. He said, "I think that most of the ownership will be a combination of fleet partners. You might see some financial players, kind of infrastructure players, just like they are entities, REITs that own hotels. you will have kind of fleets as entities as well. And then hopefully there'll be some kind of individual ownership as well. People, small businesses putting up these cars in these fleets and taking care of the car. Sort of small business fleets that, again, we see around the world for ourselves operating an SMB fleet model as well. So there's going to be a ton of experimentation. It's obvious that this model is going to evolve where it takes part of your model on the REIT thing, and then it takes Elon's model, own the car, put it on the platform. Do you see as this? Everybody talks about Uber, but hybrid. But do you see Uber operating a fleet through a REIT, and then allowing you and I, perhaps we call it Autonomy Markets fleet, and we put our vehicles on the network as well?
I mean, look, this is something Elon's talked about that most people have considered a pipe dream, or Elon just being Elon. The concept of you own your Tesla, it leaves your garage or your driveway and goes out and services drunk people in the middle of the night. Hopefully someone cleans it, and then it comes back and you earn revenue from your car. You know, when he said that, everyone just laughed, yada, yada, yada. But like, to your point, I mean, parse what Dara just said on the call, and then hopefully there'll be some kind of individual ownership as well of people, small businesses, blah, 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 blah. That is it, right? If you're individually owning a car that's in autonomy, like you're literally validating what, you know, Elon said. And that, as always, because, you know, at any point of the Elon cycle, it's like, oh, Elon said he's such a, you know, whatever, blah, 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 crazy of him to say something. And now I think you have to kind of, again, think again, can that be part of the long-term strategy? And if it is, you know, that's how maybe other fleets, if they can get individual ownership, can not necessarily have as many cars as Uber and Lyft have today in their network, if they can rely on other individually owned autonomous cars that are out there, whether it's Tesla or other cars, you know, they're licensed, you know, maybe Waymo licenses their technology to an OEM, and, you know, those individual people can plug into a network. So it's fascinating. I still think it's longer term. I still think it's a little crazy for the reasons we talked about, but you can't now deny it as an impossible future possibility for this industry.
And it gives Uber what they need more than anything: fragmentation. They're going to get it.
Yeah, I mean, that's obviously that's what they need the most, for sure.
You're going to have REIT corner here. We're going to call you Mr. Walt, Mr. REIT. If Uber is going to walk down the autonomous vehicle REIT route, what is the best way for them to potentially explore it?
I think that market will just evolve. Like I've said on past podcasts, you know, if there's a return available, money will flow to it. And, you know, the people that typically queue up that in a private market investment setting that ends up being public is private equity. So as I think you get to scale, and we'll talk a little bit more about what scale means in an autonomous world later, you know, that'll just be a natural offshoot. Again, the government, it's not an opportunity today, because we're talking specifically about why do you do this? It's for favorable tax treatment, right? So it's something that it's probably a longer term lobby that people should be doing into the government to enable something like that.
We'll see how that goes, because today 15% of Uber's inventory is fleets. How do you see that number growing in the future? Do REITs accelerate it?
Yeah, and again, the 15% that Uber talks about is mostly international, right? In order to get into India, they had to partner with taxi companies, because the ability for, you know, car owners to plug into the Uber network as we know it here in the United States just doesn't exist to the same extent. So I think in the US, it's a lot lower, and they probably want to get that up to, let's call it 50% within 5 years. The bigger question though, Grayson, is great. Fleets, I think they're already out in the market. Uber, that is, helping to seed, you know, not autonomous, like actual fleets in the US. At what point does that fleet inventory, let's say it's 50% fleets, so that's the subset of the total rides that are in Uber, and let's call it the United States, within 5 years, when does that subsegment become autonomous? Or what percentage of that is autonomous, and in what year?
20, 30, 1%, maybe 2%.
That's it? 1% of the total, so 2% of the fleet. Yeah. No way. It's going to be higher than that. I'm going to say, yeah, I think it's going to 5 years. I mean, I think it's going to be higher than that. I'm going to say 10x that, 10% total So, 10% of the fleet. So let's say it's 5% of the total trips within 5 years. And I think that's going to prove to be conservative too. I feel like I want to already raise that. I want to say 10 to 20, meaning 10 of the total 20% of what is actual fleets, with the remaining 50% still being human drivers filling in for the peak time of rides.
Are you looking at this from a U.S. perspective or a global perspective? Because my number will change if it's a U.S. perspective versus a global perspective.
I'm going to say both. At that point, I think they're trying to get to 50% in the U.S. as it is. It's going to be tight, right? 5 years, but I think once the model kind of changes, it's going to happen fast.
Globally, 1 to 2%. United States, 7 to 10%.
Oh, okay. So now you're jacking it for the U.S.
Yes, because the U.S. is going to see the largest adoption. If we follow the breadcrumbs that Waymo's leaving for us, and you look at their scale, you look at where May Mobility is going, and you look at the development of this technology, we're at an inflection point. We're about to hit a hyper growth scale. If you want to use the hockey stick growth standpoint, we're about to hit that pretty substantially.
You may be right. I mean, there's markets that are like Germany, for example, that are very restrictive. Elon's talked about the challenges regulatory wise that he's had in Europe. So I hadn't really thought about it on a global basis. Maybe there's a differential there. We'll see. But those markets will also theoretically benefit from accepting Chinese autonomous vehicles in their markets, which will be subsidized and low price. So maybe you can drive penetration. It's similar, if not faster, in some of these markets outside of the United States.
And if, depending on what's being announced by BYD next week, BYD operates on the Uber network. Perhaps those BYD autonomous vehicles could come on the Uber network in the European APAC.
It's 5 years. It can be anybody. We're seeing how quickly, changes in AI and compute models are happening and accelerating things. I think things are going to happen fast. Like I said, this is the reason we're doing this podcast in the first place. We're at an inflection point. Let's go on, though, to talk about, in general, again, stocks down 7%. What is Uber doing to address the market with these concerns about autonomy? And I think Dara, or the team there, probably prepared this for him, but Dara delivered a solid message. Mm-hmm. There are 5 keys to success in autonomy, according to Uber. And let's go through them one by one. First, number one thing that they talked about, something near and dear to your heart, Grayson, regulation. And, they have to have the regulation in place to enable autonomy to move forward. And look, we talked about the tragedy that occurred, in Washington, D.C. with airplanes, and how that was going to be a lot of work for Duffy, the head of transportation, former Congressman head Duffy, secretary, I guess, Duffy now. But it seems like he's already finding his groove and has quite the personality on Twitter already. So, tell me your latest thoughts on kind of where Duffy is in addressing the first of 5 factors to Uber's autonomous success.
If everything holds the way that I'm predicting it to hold, Secretary Duffy will go down in history as one of the most transformational, important secretaries of transportation in history. I truly believe that Mr. Duffy and Deputy Secretary Bradbury will begin to usher in the regulatory framework that will allow autonomous vehicles and autonomous trucks to scale in the United States. And when they do that, they are going to unleash job creation and economic benefits for the U.S. economy.
Is there any update on where he is in hiring his chief lawyer for DOT? Because that's obviously going to be a critical role to achieving these goals.
No update at the moment, but I have the full faith in what Secretary Duff is doing, and I expect to see some movement in the coming weeks, especially as it relates to autonomy.
I mean, regulation-wise, we'll see. There's national framework, and then there's, what's emerging as a very strong mandated bully pulpit that can be used by the administration on some of these in some of these areas to some of these cities, and maybe using certain things that cities and states get in order to achieve larger business goals. So we'll see if that comes as an opportunity for this industry. Maybe not a top priority for the Trump administration at the moment, but certainly something to consider. Let's go to number 2 on the factors of success. What Uber's calling superhuman safety, meaning that it can't be as safe as a human driver. It has to be even safer. And this theory of airplanes have to have zero tolerance for any crashes whatsoever. Where do you come out, Grayson, on how good does it really have to be for this thing, for autonomy to hit scale. Does one accidental death set the industry back 5 years?
No, because we have history as our guide. When we nearly lost a sitting United States president in a Wright brothers crash, the president did not go on the plane, but we did lose an individual. We did not look back, despite the lobbying from Dulles, pushing back, trying to get the Wright brothers. And what we ended up doing was shipping the Wright brothers to France. They perfected their technology, but we did not allow incidents to stop the progress that we made in transportation for air. So I believe the same thing will happen because there is a historical track record. And if you look at it from a safety perspective, they don't do the 4Ds. They don't get drunk. They don't get distracted. They don't get drowsy. And they don't do drugs. Sorry. Humans do all those things. Robots don't.
I think people get that. It's just, what the reaction is to some of these accidents. But we'll see. Superhuman safety. I kind of with you. I don't know if it has to be superhuman in today's world. There used to be people that said like, oh, you need privacy, and people just didn't give a shit about privacy in terms of the apps that they're using. Obviously, no one wants to die, but I think everyone is going to evaluate these situations for what they are, and the insurance companies will act accordingly. Number 3 on Dar's list, cost-effective hardware, meaning like you got to get the cost of this product down. And I think there was a slide that they provided where they related that the human-driven rides represent about $2 a mile of cost. And currently, in their view, Uber, if you just looked at the hardware platform, meaning all the sensor kits and the vehicle financing, the full vehicle financing, I don't know if that's a good comp, but whatever, vehicle financing, and then they break down AV operating costs and fleet management into 2 separate categories, but I think you and I will consider this just fleet management. Energy, charging it up, cleaning up the puke, the remote operator for when the thing is not, is not ready. And obviously the insurance. And that currently is greater than $2 a mile. And that, in Dara's mind, in order for this to be truly successful, is going to have to get below $2 a mile. Look, that $2 a mile may go up if, wages go up and the demand of drivers go up. Hopefully it does. I think, a lot of these drivers should hopefully try and make more money in the future as more opportunities become available in our country with some of the changes that are occurring. What are your thoughts on, the cost-effective hardware factor?
The hardware costs are coming down. We're seeing it with the prices of LiDAR. We're seeing it with the manufacturing. And a lot of individuals, analysts, not you, but other analysts who won't be named that go on CNBC and say stupid things, say that Waymo will never be able to compete because of cost structure. Well, they've got a little thing called search. It's still going. And they got another thing called YouTube. It's still going. And Mr. Piecyk on the earnings call said that they are focusing on reducing the cost of the latest hardware version of the Waymo driver. They're in a cost reduction strategy now. I would love to see at some point Waymo make those numbers public. Do you think we'll ever see those cost reduction numbers, or what the true cost of the Waymo driver is ever become public?
I mean, if Waymo ever spins out from Google, we'll have some sense of it in an ops line. I don't know if you get a specific breakdown. Obviously, it's a good point to mention, the incremental cost of LiDAR as a sensor, and whether that's necessary in the overall cost framework of the car. But, look, let's bring this back to Elon. And, what I was told by supposed industry experts at the time about the cost of the satellite dish that was sitting in your backyard to connect with the satellite. First, you couldn't do it. Then there's no way you got it under $1,500. No way you get it under $1,000. No way you get it under $800. And, he just kept following that cost curve all the way down. Even in the LiDAR world, I've seen Luminar, and I've seen the components that have been designed out of their sensor. Now, Rich is suffering from the first version of the sensor. Not suffering; it's not their fault, right? That Volvo can't figure out the software. But like, there's obviously cost improvements. So to argue that those costs can't get down to that point over time just ignores technology for the last 30 years, or at least the last 30 years that I have been watching it. And, so we'll see. I tend to think that is also achievable. Let's go to number 4, the fourth element of success, according to Uber, fleet management. Now, this one is interesting because I'm pretty sure that historically they've only talked about doing third parties for fleet management. And, Daryl on the call, and now, the messaging is, well, maybe we'll get there long term, and that's the goal. But, we have to put some CapEx and some dollars to help the ecosystem, which I get. They're claiming that was said before. I don't remember hearing that before. I think that's new. And maybe that's part of maybe the stock reaction that people have to factor in. Use of free cash flow is to seed some of these fleet management markets, whether they end up being used for autonomy or just for actual drivers themselves. So I think it's a pivot. They're claiming not. Companies always claim that they don't pivot. Oh, yeah, we said that all along. But bottom line is they are going to help the market. And this validates something that you and I have already thought is very important, is that, this component of the puzzle, the fleet management.
Uber historically has seeded the market. They've seeded Aurora, they've seeded Waabi on the trucking side, so they have histories of seeding the market. And on the earnings call, Mr. Karashaki talked about acquiring depots, actual physical real estate with electrification. Is this part of this green mandate? But the green mandate's going away, or you can use the term that President Trump uses, the green new scam. That's going away. So why focus on this electrification? And then I ask that because if you talk to an electrical engineer, some permits in the United States take 4 years to get. You're most likely going to have to go near a substation, and that real estate's currently at a premium right now because of the access to the energy. Where do you see this coming from?
Oh, I've got a lot of thoughts on this one, Grayson. And this is something where REITs can play a role because this is physical in terms of the assets. But it's not obviously just charging. It's also going to be cleaning up the puke, cleaning the car, right? And to the extent that there are human drivers, like this is where the fleet will emerge from. So whether it's autonomous or not, the location of that depot is going to be important relative to where your peak times are. You're going to need more than one location in the city because you want to be able to have that car sitting there when there's not peak, and then send it out, for when the ride is needed. And look, cities don't have like tons of real estate, so I think you're almost like Walt Disney in the early days. You want to identify those locations and grab them now because that's going to be a future critical asset to have. It's like having a cell site in the right place in order to provide coverage for your wireless service provider. So, grabbing those locations now, and then to your point, it could take multiple years to power them up. I've seen situations where fleet managers are like backing in, trucks of propane gas that feed generators that then charge the cars to get them because of the grid and the electric company taking a year or more. You're saying what I've heard is a year to hook these things up. So yeah, that stuff takes time. It's important to have. And again, it can be, I think, a differentiated asset. Fleet management is key. It could be it could be like the tower industry, a separate industry that ends up being worth hundreds of billions of dollars that Uber uses and Waymo uses separately and Lyft uses separately. And it can be like a shared asset rather than them having to put the CapEx. But in order to get that going, Uber probably has to play a role. And like, you think about the wireless industry, to get that going, the wireless operators built their own cell sites. And then ultimately they sold it off on these multi-billion dollar transactions. So imagine someday Uber has a portfolio of, fleet management assets that they just then sell private equity. It goes into a REIT, whatever it is. I think that's how the model evolves. And again, you don't even have to bet on autonomy. You start doing that today because your goal is to get to 50% fleets for trips as it is, even if it's going to be human drivers. Lower insurance costs, better trained drivers, more consistency in cars. Like the list goes on the benefits there.
If Uber didn't seed the market, who would?
I think you're going to have startups that are going to emerge. Maybe Google, Amazon. I don't know where they're parking their delivery trucks. I mean, they've got multiple reasons to have locations in the market. Maybe those trucks are probably not the same as where you'd want them from an autonomy standpoint in terms of size and location and cost. I don't know. There'll be like I said many times, if there's money to be made, dollars will flow. Let's go on to the fifth and final element. So let's just review for those that you had regulation, superhuman safety, cost-effective hardware, fleet management, and now the last one, guess what it is? Of course, a high utilization network. You can't have autonomy without the Uber high utilization network. So this one is a little, self-promoting, I think, obviously on Uber's part, right?
It's not bad though. It's a good thing.
I mean, what's interesting about this, Grayson, is in this kind of new initiative by the company to kind of hit this company meaning Uber, to hit these concerns of autonomy, that are out there. They've been much more open, all the credit to them. But they referenced, I think, that there was a broken relationship with Waymo historically for many years, and that the partnership in Phoenix fixed that. Can you give us any color on what you think that broken relationship was about with Waymo?
I will say this in the context that this has all been documented in court cases. This is all available. If you read the court cases, it's all there out in the public. This is not hearsay. This is documented in court cases. This, and I'm going to use the term suspected because I'm not going to accuse an individual of doing something, so I'll use the term suspected. Anthony Lewandowski, a former Google engineer, was suspected of stealing LiDAR secrets and taking them to Uber to accelerate. This was ATG, the advanced technology group at Uber, to accelerate their development. It was suspected that Travis Kalanick, the former CEO of Uber, accelerated and instigated this. Again, suspected. What happened in the court case was Uber had to pay Google a settlement fee. I'm not sure the exact amount, but they had to pay a settlement fee, and they went on their own way. And as part of that settlement, I believe, that Uber agreed to shut down ATG, which they eventually sold off to Aurora. Again, that's what I believe. I don't have paperwork to back that up. But it was all comes down to the theft of LiDAR, which at that time was the critical ingredient to make self-driving cars.
Do you think that's what they're referring to? Because, that happened such a long time ago. This is obviously before Dara becoming CEO of the company. So you don't think there was anything more than that?
There was a lot more behind the scenes. I just do not have the sources to point you to break it down. But I will say this publicly. There were a lot of strained relationships around the different individuals and personalities at both companies outside of the court case.
I think that the implication or what they're trying to imply, or at least what I'm inferring, is we're fixed with Waymo, and as Waymo goes, we're going to be their partners, which kind of ignores the fact that, yes, Waymo is going to go in Atlanta and I think Austin, but there's a lot of other markets where Waymo is still going it alone and they're not partnering with Uber.
I would say, based on market analysis, that the relationship is not fully repaired. I say that because Waymo is on their own in several markets. They're partnering with Uber in several markets. If it was, hi, let's come over for dinner. Oh, hi, let's go on vacation together. Then you would start to see an expansion of that. I don't want to say it's frosty. I still think that there are some mixed hard feelings on both sides. And I would summarize it this way. It's still actively being repaired. But, this is a big but. If Uber can prove value with Mr. Karashaki's strategy of owning the depots and doing the cleaning and managing the fleets, then perhaps you could see an acceleration of that relationship. Because at the end of the day, Alphabet Waymo does not want to operate a fleet. They want to create the world's best driver. And if Uber wants to do the dirty job, like Mike Rowan says, that's an opportunity for Uber to thrive.
I think that's a great point. If they're willing to put forward that capital to seed that market so Waymo doesn't, that's gonna build, I think, a lot of brand equity up. And Uber makes a big deal of talking about how in Atlanta, which is now teed up for June, that they are doing everything for Waymo. Waymo is just providing the cars and Uber's doing everything else. So look, I personally believe, this is a guess, I don't know this from being told, that Waymo is just testing it in that market. What would it be like if we just fully submitted to Uber in the market? And they'll see how that performs against other markets. To Uber's benefit, it's going to be a fair test, meaning that, I think they're going to put several hundred cars in Atlanta very rapidly, because I think we're probably approaching 750 cars overall, several hundred cars in San Francisco. They want to get to several hundred cars in Atlanta to have it as a real test. And we'll see. I can't wait till they launch in Austin and Atlanta. We'll compare what that looks like with decent scale. 'Cause I'm not sure, like, what's the number in Phoenix?
Phoenix is probably the highest market. I would say it's got to be over at least 200, but I don't have data to point you to on the size of that market.
Right. So maybe Phoenix already provides some signal then. So we'll just get more and we'll see how that goes.
Do you feel that Waymo has enough of the JLRs? Do we have any public documents or anything to look to see if they have enough of the JLRs, I-Paces, to truly scale before the Hyundai Ioniqs come?
No idea. No idea. I'm not sure. We got to figure out a way to get into that info. And I think, it's only been speculation in the total number of cars that Waymo even has on the roads. I would hope that if they hit 1,000 cars, that they press release or otherwise tweet that information out.
Atlanta, you're suggesting, will be in the hundreds of vehicles, so that the whisper number is 700 plus. And so let's say Atlanta comes on at 200, that's 900 vehicles right there. They're getting very close to that magical 1,000 number.
Yeah, maybe we should. Okay, here we go. We have an opportunity, and we'll clip this, and we'll start like the clip right here. Grayson, I predict that in 2025, Waymo will announce that they've topped 1,000 autonomous vehicles in the market.
Walt, I 100% agree with you. So we made the prediction. We're sticking to it. You and I agree. One more thing on Waymo, Walt. They continue to expand. Today they announced they're going to the Big Easy. They're going to go play in a jazz band. They're going there. Axios reported today 10 vehicles are on their way to New Orleans for Waymo for testing. The interesting thing, and this was a quote from Waymo, includes freeways. They're testing freeways in the Big Easy. We're getting closer to that big unlock that you keep talking about.
The bottom line is they're just going to test them everywhere now, right? So it's coming. It's getting tested in every market. So they realize that they're going to want to do this. And yes, that's going to be an unlock. And it gets back to, the headline risk that exists for Uber and Lyft when they announce those freeways. And if there's some airport, connection to it, that's obviously going to be an incremental issue that Uber is going to have to deal with.
On the earnings call, Dara talked about the benefits of partnering with Uber for airport access. Do you really truly see Uber accelerating that? And if so, does Waymo just partner with them just to get airport access?
I think this is something we're going to need regulation for. Is the implicit threat there that we've done the work with these, transit agencies to get in the airports and you're going to need us to get there? I hope not. But that certainly could be a possibility.
There's a lot of possibilities happen in the market. And one thing that didn't happen, which was a possibility, that Honda and Nissan, they called off the merger. They said, no, thank you. Then Reuters reported today, lo and behold, back comes Foxconn. They're interested. Could Foxconn potentially become the manufacturer for autonomous vehicles that we end up seeing on the Uber network to further that fragmentation?
This is a topic that's near and dear to your heart, Grayson. I know you love to try and bring Foxconn in. Foxconn, I thought was going to have a good relationship with the president the last time when he and Massa were promising jobs in Wisconsin that never really materialized. But maybe the second time around is the charm, especially as it relates to autonomy.
Because Foxconn could hypothetically license a stack from Nuro or Wave and put those vehicles on fleets, then you have the rise of fleets. We're not getting into Wisconsin, but it's a hypothetical because the phone that I talk to you on seemingly every day was built by Foxconn. It's an iPhone. Then if Foxconn does come back, does Apple perhaps rev something up because the Vision Pro is stalling out?
Apple is a low single-digit grower. There's obviously no super cycle. You would think that products that people think that have been kind of shuttered historically, whether it's a television or a car or whatever, maybe should be reconsidered because they need to add, you're talking about things that they need to add like 20, 30, 40 billion dollars of incremental revenue for new products to try and get that low single digit growth rate up to 10%, which is, would be a reasonable number to justify the type of valuation that people hope for these things. So never say never. And I think if you start to see these models evolve where there is licensing and then there is, OEMs, and then there's change in who the OEMs are, perhaps away from the traditional automakers who, as we talked about earlier, have kind of a legacy brain thought process, even though they've added people from Apple. Yes, I think that's certainly a possibility. I think in that scenario, though, would they want to license someone else's autonomy, or would they want to kind of rekindle their own software development and their own autonomy?
They're behind on AI. They licensed ChatGPT and put it in Apple Intelligence. And then I would love Mr. Cook to come on here. Mr. Cook, Tim Cook, you're probably the only individual I know that actually uses Apple Intelligence. If there's a viewer, a listener that uses Apple Intelligence as much as Mr. Cook does, please write to us and explain to us why. I think I've used it once, twice. I find no value in it. Do you use it, Walt?
Yes, Tim Apple uses the AI on his phone, but I think that's a good point you bring up. Given where they are with AI, you have to wonder whether they could do any autonomy on their own, and whether they'd have to license it out. But then, like the Apple model is, marrying hardware and software. So I think that gives some credence to your view on Foxconn. Like, why do something with an OEM, do something with Foxconn, get your own software, don't license someone else's? I don't know. I just don't see it happening with the existing management team. There's been, whatever they spend, $30 billion a year in R&D, nothing's really generated. At some point, you have to not assume the positive, but assume the negative, that they can't deliver a product like that. But what about Ford? Like, maybe Ford gets it, because maybe there is a light at the end of that tunnel.
Look at a light at the end of the tunnel. If Detroit doesn't change anything, they're on the verge of becoming Foxconn City, because Mr. Farley came out on the Q4 2024 earnings call openly admitting and saying that Ford would explore licensing for SAE Level 4 autonomy, with the caveat being for personally owned vehicles, but they're open to licensing. This comes after Elon has said it, which raises the market question. Was Neuro's pivot timed right? And was Alex, Kendall, and Wave right all along, saying we want to build a licensing business?
Sure. Like Neuro, if they have the right technology, they're going to find a partner in an OEM. And maybe this is the early signal that Ford will be that partner. Who knows? They still have to do something with their R1 and R2 vehicles. I'm guessing that given what Uber's signaled on their earnings call about willingness to spend money in this market, that might be an end destination for those robots, or I guess that they call them R1 and R2. I might have that wrong. But I mean, there's other companies out there that theoretically Ford could license technology. And I still wonder, there's a lot of smart people that have kind of moved into the trucking world that were previously in the car autonomy world. There's, intelligence there. There's progress there. We've talked last week about Kodiak and, the progress they've made. We're all rooting for Aurora to get to drive her out in just a couple of months now. Who knows? Maybe there's an opportunity there for some of these OEMs, because those companies are obviously used to dealing with, partnering with OEMs, in their case, trucking OEMs, so that they're familiar with that type of, I guess maybe not a licensing, but at least dealing with those companies. There's probably a difference in terms of licensing versus just, sourcing a product and putting your products on there.
Trucking industry is more prepared. If you look at it this week, we had the announcement, the partnership between Waabi and Volvo Autonomous Solutions. That was announced this week. It's also the same partnership that Aurora has with Volvo Autonomous Solutions. And I got to go give you a shout out to the Light Shed podcast and to our listeners and viewers. Walt, Rich, and Brandon do a phenomenal job. They bicker, they give really great information, and Rich drops awesome media bombs. So I highly recommend you check out the Light Shed podcast. And on the Light Shed podcast, they have a new section, and they made a nice graphic for it. Olivia did a good job there, Walt, called the Disgrace of the Week. That language is a little harsh for me because I'm Mr. Nice. I'm Mr. Nice, okay?
I'm bringing you more to the dark side, though. You're not as nice now as you were prior to Autonomy Markets. I've brought some good rants out of you. You got a little bit of edge to you. So
listen, Black Sabbath's playing a final concert, so maybe I'll get a little more edgy with you. I just hope Ozzy can last for the show. But I'm gonna behave, and I'm gonna put the nice normal me hat on that everybody knows, and we're gonna call this section Unforced Error. There was a very, very two big unforced errors. Not a very big error. Two very big unforced errors. Okay. As you file, as the kids say these days, the first one, file asunder, you can't make this up. I repeat, you can't make this up. in the official press release photo rolling out the Volvo Waabi autonomous truck. It was a photoshopped Aurora truck. You know how we know, Walt?
I have no idea. Was it the tire? Was it the tire?
There's details.
Was it the shape?
No, not the tires.
Was it the LiDAR that they were using? How did you figure this one out?
Oh, you're getting technical. Well, I'm going to go simplicity on you. The United States Department of Transportation FMCSA number was Aurora's number. It was their truck.
So this is like some code that's like printed on the side of the truck. So they basically took a Volvo truck that was an Aurora truck and just photoshopped the Waabi brand on it.
Yes, because every truck must be registered with FMCSA and have a US DOT number on it. That was their truck.
It's a lot of letters. It's a lot of letters. But the bottom line is they just photoshopped an Aurora truck.
Correct. And that's the problem. Problem two, the announcement comes out, the interviews come out. The founder, well, you come out there, you'd be very proud of what we do. We're building a truck. We're very focused. We're very efficient. We're capital frugal. Yeah, we're going to go into self-driving cars and humanoid robots next. That's where we're going. You raised $232 million. You don't even have a Series C yet. You don't have a truck on the road. That's unforced error number 2. Why do you do that?
Well, the first one, I'm going to give it a pass because that's just a PR person that did not have a good day. And after this podcast hits, is probably going to have a worse day. So I feel bad for that person. The second one, I agree with you. That is a really unforced error because while it's our job to say like, okay, you know, the tech is really good and once they master this, and this is like the root of any disruption, like it starts with a smaller industry where a company succeeds, gets to scale, drives their costs down, and then they move on to the next industry. And that's our job to determine that. But for a company to start talking about this stuff before it's getting its first steps, that doesn't always play well with investors. Investors want you to stay focused on the initial prize. Make this one work. Get to some level of revenue ramp or profitability at this level before we're, getting into these next markets. Otherwise, it's like, why are you even messing around in the trucking industry? I would also say it sends the wrong message to the ultimate customers of the trucking companies themselves. Like, if you're like, what, are you there for us? Because like Aurora is going to say, we're right there for you. Kodiak, we're right there for you. If Waabi's talking about robots and autonomous cars, it's probably not the best message for the customers that you're trying to target. They want someone dedicated to them, not getting distracted about other stuff.
Exactly, because most likely the terminal's about 30 miles away, the Waabi terminal from the Aurora terminal. You're going to run on the same route, Dallas to Houston. Same truck, the Volvo VNL. Now, how is a customer going to choose? Is this going to be a race to zero? Okay, so Aurora's 2 cents a mile cheaper. Well, wait a second. Waabi's going to drop the price to 4 cents. Are we going to get in a race to the zero? Because I asked that because Waabi's not going to operate the service and Aurora's not going to operate the service. Volvo's going to do it. Are they just cannibalizing in this drive down to zero?
I mean, if you think their development path is the same, sure, but I'm not convinced that the development path of these companies is all the same. And that's why, again, this is like any story stock or company. In the case of Aurora, let's point out, like, you can say like, okay, they go driver out in May or April, whatever it is. What does that mean? It doesn't mean anything in terms of revenue or free cash flow that you put multiples on. No, it doesn't, but it validates the technology. It's them hitting a milestone, and the valuation of these companies is based on where investors think they'll be in 10 years and these early, evidence of it. And again, get back to my wireless days before these companies were spending CapEx, they had no EBITDA, but the number of customers that they were signing up was an indication of the success. In this case, getting driver out and getting those miles out there is going to increase confidence, not only in those companies, but I think in the industry in general. So I think it's way too early to talk about commoditization because that assumes that they're all going to get there at the same time and drive the price down. And I may be wrong. I just don't believe that's going to be the case. We're going to see over the next 2 years, winners and losers. And the guys that can't get to driver out in a reasonable time frame are just not going to get the incremental funding and they're going to fall by the wayside. Sorry, but that's the way it's going to go.
There's going to be winners and losers. I'm very confident, I'll state for the record, that I do believe by the end of April, Aurora will achieve their safety case and go full driver out. Next week, They release earnings. What else do we need to look for in the autonomy markets next week?
Well, I'm hoping that in the autonomy markets, we're going to see some new merch that says, since we have this unforced error, it's been X days since my last unforced error. Can we get t-shirts? Like that's set up. I would buy one of those.
I like that. I'll give you one.
Next week, bigger. Well, first of all, this weekend, Super Bowl. So huge, obviously. I'll be looking for those Waymos in New Orleans. Maybe they can pick me up in New York and drive me down to New Orleans for the in an autonomous ride. So I'm either going to be very happy next week or very sad. So let's just prepare for that. But we also have, I think you have Lyft reporting, you have DoorDash reporting, you have Aurora. Hopefully they're just going to go out there and revalidate that they're going to go driver out in April. But another big week, I think, in terms of stuff to talk about in autonomy markets.
I know this will not make you happy,
no.
but I want to highlight the genius of a certain individual who's one of the greatest basketball coaches of all time, Mr. Pat Riley. During the run with the Lakers, when they did not achieve, I'm not a Lakers fan, I'm a business fan. They didn't achieve the three-peat. After the second win, Mr. Riley went and trademarked the term three-peat. He owns the trademark three-peat. He has agreed, I'm sorry, Walt, to license it to the NFL and to the Kansas City Chiefs if they do get three-peat. And the amount of money that's been reported in the Financial Times and Wall Street Journal that Mr. Riley will generate from that trademark, pretty significant if that happens. If that happens, folks, Walt's going to be very upset. But Walt, happy news. I'm having a Super Bowl party, and there will be Eagles fans in the house. We are a non-denominational house, but there will be Eagles fans, so we'll be rooting for you.
A non-denominational. By the way, the other thing for the following week is, well, actually for next week is I'll be in San Francisco meeting with several of the companies that we've already talked about here today. So if you're out in the Bay Area and you want to catch up and you're in the autonomy space, love to hear what you have to say about your company.
Reach out to Walt. He's always fun to hang out and talk with. I know from experience. The future is bright. The future is autonomous. The future is REITs for autonomous vehicles. Walt, until next week.